All right, guys. Good afternoon, ladies and gentlemen. Good afternoon. Welcome back to the session. This is the 3 p.m. trading room. We're gonna jump straight into it. We're gonna get straight into it. Yeah, we had the 12 o'clock. We had the 9:30. We're gonna jump straight into this one. Yeah, welcome back, everyone. So let me just share my screen here. All right. So what we spoke about, the setups we've been looking at, nothing has changed still, right? If you look at gold and silver, you guys know what we're anticipating from these two, from the commodities. All right, so gold and silver, we already spoken about it, what we're looking for. So just waiting for this to complete. Gold as well, just waiting for this to complete. So nothing has changed on gold and silver. The yen pairs, nothing has changed. NZD, JPY, they're about to complete the corrections. Actually, if you look at, so this is NZD, JPY, Swiss yen. I was not even looking at this one earlier on. So Swiss yen, we can see what's happening. So I'll be looking for my trading opportunity on Swiss yen. So it has started to move towards the upside. Let me just see. Yeah, Swiss yen has started to move towards the upside. So watch out for your setups. All right. Watch out for your setups. It has started to move towards the upside. All right. So definitely we'll be looking for my entries. I'll be looking for my entries on this one. Let's see. So H4. Yeah, I'll definitely be looking for my entries towards the upside. All right. So Swiss yen, NZD JPY is also about to resume the trend. All right. So we're just a pip retest, whatever you want to call it. We had just a retest the low there. So from here on, I would anticipate price to go up. I would look for my buy opportunities. I would definitely look for my buy opportunities. Let me do this. I would look for my buy opportunities. All right. There's a possibility it may still come back down before it goes up. So these possibilities are always there. You just need to know how to manage your expectations, so to say. All right. So if it comes back down one more time to tap this area, then I'll be waiting down here for it. But if it goes up, then I'm still going to look for a trade towards the upside. So let's see if it's going to come back down, or it's going to give us a setup. This is where setups are important, because if price is going to go up, your setup will confirm that. But without a setup, then yeah, it's going to be a bit confusing. All right, so NZD JPY, it's about to resume trading up. CAD JPY as well, it's about to resume towards the upside. Let's see. Yeah. Yeah, we'll be looking for, but yeah, so this is how we're looking with the yen pairs. All right, it seems like they are about to move. Look at pound yen. Look at pound yen. They are starting to move. They are starting to move. There we go. 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 Yeah, they are starting to move. There we go. So we've been waiting. Now they are starting to move. So yeah, so we'll be looking for trading opportunities towards the upside. Euro yen as well. Let me actually remove this. Yeah, so euro yen on the daily time frame, we can see that this week price is not, well, it's rejecting the inside of this week. Yesterday's candle, the inside of this week. All right, so yeah, so that's what we can see now. All right, so the yen pairs, nothing has changed. Yeah, nothing has changed. So gold and silver, the commodities, still the same. The yen pairs are still the same. Still the same. Yeah, they're still the same. Still the same. Let me see. Can you please explain NZD USD? Explain what on NZD USD? Do you have a specific question? Maybe what do you want me to explain? You mean the analysis? NZD USD. Remember, we spoke about NZD USD going down, and it has gone down, right? It has gone down. We spoke about that. So the idea was to see if it's gonna go all the way down to this low here, but it has gone down, right? So what's happening now is it is still going down. It is still going down. That's what's happening right now. All right. So we can see that we have, or rather, let me use the lower time frame. We can see that we have price creating lower lows now, right? All of this is a correction. So all of this is correcting this. So we can see that price has been breaking the previous structure. All right. So the structure is bearish at the moment. So what we would be looking for is one more push down, right? Because of this bearish structure. Now this push towards the downside, we would look for it projecting that we are coming back down here. We're going to come back down to tap, projecting that, our forecasting that we're going to come back down to tap that zone, right? However, since it's a correction, it's a complete correction as it is here, right? So looking for, it's still correcting, so any move towards the downside here, right? So now if it creates a lower high, we're gonna get that move towards the downside to come back to the low. The way it's moving right now, it seems like it is going to give us that correction, the way it's moving right now. So it's not moving aggressively up. So with NZD USD, I would still look for one more push down, right? I would wait for this to create the lower high, so it could still go a little bit up before it creates a lower high. So a lower high could be somewhere around this zone. It could still go up one more time to create the lower high, and then go down, right? So something like this. All right. So at the moment, for it to form this move, for it to give us this move, it needs to complete the move it's doing right now, right? It needs to complete the move it's doing right now by going up slightly just one more time and then completing this correction here before it gives us one more move down. Right, this is just going to be a short-term move towards the downside, not a big one. So that's NZD USD. That is NZD USD. Good afternoon. Did you see USD is selling right now? Sakile, I don't know, my man. I don't know. Yeah, I don't know. What time frame are you looking at this? Are you looking at this move here? So do you want to sell? You can go ahead, my man. If your analysis says it's selling, then it's your analysis. We spoke about NZD. We spoke about USD Swiss in the morning, right? So you're looking at only this piece here. If you get an entry, you can go ahead. If you get an entry, you can go ahead. If you get an entry, you can go ahead there. Let's see. I'm sure you're looking at this on like the 1 minute time frames, the 5 minutes time frames. On those time frames, definitely you will get a sell on those time frames. All right, you will get a sell on those time frames. So if you do get a sell, if your strategy if you get a setup, then you can go for it. You can go for it. Can go for it. All right. So with the time frame I'm on, this wouldn't be a sell for me with the time frame I'm on. I'm looking at the daily, the 4-hour, 8-hour time frame. I'm looking at the daily 4-hour, 8-hour time frame, right? So with the time frame I'm on, I would wait for price to create a higher low here for a continuation up. I would still stick to this structure, right? So my view would be, I would wait for a higher low, and then if price forms a higher low, then I would look for my buys. So for me, I wouldn't sell this move. Yeah, I wouldn't sell. It's like a move like this here, right? So I would wait for a higher low to form, and I would target the move like this here, a move like this. On the 5 minutes time frames, I'm on the 5 minutes right now, so definitely people who are trading 5 minutes time frames, this is a sell for them. I mean, it's been a sell from these areas, right? It's been a sell from these areas, maybe also here, also there. But where the market is right now, I don't think there's a sell as yet, unless it gives us a setup, right? This was a setup, that was a setup, this also here was a setup, right? So if it forms a setup, it's gonna be a sell. As it is right now, it's just falling aggressively. It needs a setup. You see that? It needs a setup. So yeah. So with myself, the PCE came out. I almost forgot. Calendar. Whoa. Calendar. The PCE came out. So not the PCE, but the unemployment claims at 2:30. So that came out. It came out. Let's see. It's well, it came out good for the dollar. So we're seeing this reaction here. Okay. Yeah, all right. Yeah, I mean, I get you 100%. So yeah, so if it's going down like this, right? For me, it's creating a setup for me to buy. If it's going down like this, so I wouldn't necessarily sell. So I thought when you said it's selling, I thought you wanted to sell. You wanted to look for a sell. That's what I thought. But yeah, it's all good. It's all good. So yeah, so let's wait for a higher low. The only way this will invalidate our setup is if price continues to fall and it goes down to these areas, right? If it continues to fall and then comes back down to these areas, then it would possibly invalidate our setup, right? But as long as it doesn't break that low, we are looking for a higher low to continue this. So if it does this, it will invalidate the setup. It's going to give us a different situation and scenario it could give us a different situation or scenario, or it could just do this, go down, tap that low, and then go up again. It could still do this, right? But if it breaks, it's gonna be a different, it might give us a different view, which this could be the view, right? So at the moment, still looking for this. So waiting for the higher low here. I can see right now it's on the 50 of the Fib. It's testing the 50 of the Fib at the moment. Well, it could maybe still go a little bit lower before it goes up. Yeah, just waiting for, let me look at the 1 hour there, what's happening. Okay. Yeah, let's wait for the higher low. Let's wait for the higher low. Right, and look for that continuation up. My stop loss is set to break even. Okay, hopefully. Okay, that low. Oh, this low, this way your stop loss is. All right. So yeah, as long as you've managed your trade, right? As long as you've managed your trade. Let's see. I'm still holding on, waiting to buy gold. 4449. 4449, I remember it's down here, no? Wait, where is it? Down here. 4449. Around these areas here. Hey, let's see if it will go down to these areas. I mean, the risk and reward ratio from these zones, it will be super massive, right? So let's see. The only way I see it going back to these lows is if it gives us a bigger corrective pattern like this. A bigger corrective pattern, it could end up going there. So getting a big pattern like this, it could end up going back there, right? It could end up going back there. So that's the only way I see. So at this point, what we need to do now is just to monitor it, right? To monitor it. If it doesn't go to 4449, and then it gives us a higher low and continue going up somewhere around here, you will still get a trade, but I see why you are keeping an eye on that zone. Yeah, so let's see. Let's wait. Let's see. It's around this zone here. Yeah, if it gives us a bigger correction, then definitely it could go down to that low. Yeah. All right. Yeah, so the yen pairs, keep an eye on the yen pairs. Right, keep an eye on them yen pairs. Let me see if I missed anything, because I wanna, while we're waiting for these markets to move, I wanna discuss something with you guys, which is educational. Yeah, I thought about a topic taken from our academy, just the topic that I want to talk about in this session while we're waiting for the markets to move, right? We've got the trading plan, we know the entries, we know what we're waiting for. So while we're waiting for that, let's just talk about something here real quick, which I know is gonna clarify a lot of things, right? And it's gonna clarify a lot of things. So guys, there's a difference between let me put it this way. There is something we call, in trading, there's something we call forecast methodology and a trading strategy, right? There's a forecast methodology and a trading strategy. Or you can say forecasting methodology. Let me see if I am, okay. Forecasting methodology. All right. Versus trading strategy. You know, I don't like using the word strategy. I don't like using it, but for the purpose of this explanation, I'm going to use it, right? There's a difference between forecasting methodology and trading strategy. Now, let's break it down. When many people start to trade, they focus on the latter and not the former, right? When you guys start trading, you focus on the latter and not the former, which is okay, which is understandable, right? Because like I always say, some of these things you learn as you go, you discover as you go, right? But now you know there is a forecasting methodology and there's a trading strategy. They are different. Now, in simple terms, what's the purpose of each, right? A forecasting methodology, guys, in simple terms, it is a methodology that helps you forecast where price is going next, right? It's a methodology that you are going to use to analyze and forecast where price is going next. Not where the entry is, but where price is going next. Where price is going next. There are different methodologies in trading. You can Google them. There's different methodologies, right? So a trading strategy will answer this question. Where am I gonna enter my position? Where will I enter my trade? That's what a trading strategy answers. Where will I enter my trade? The forecasting methodology answers this question. Where is price going? So there's a difference between where is price going and where am I gonna enter my trade. You're gonna enter your trade once you've gotten that direction. So how things work is that as a trader, you need some sort of a forecasting methodology. You need some sort of a methodology that you're gonna use to forecast that, price, right? Once you get that sorted, then you're gonna then need to work on a strategy. The strategy will answer the question, where is your entry? Where is your trade? Where is your trade? I'm gonna make an example. All right, I'm gonna make an example here and explain it. So let's look at, for instance, I'm looking for something that's not complex, something that's very simple, something that's very, very, very well. Okay, let's look at Elliott wave. I'm going to use an example with Elliott wave. I'm going to explain just a piece of it, and then you'll understand it as a forecasting methodology. All right. Elliott waves. Now, Elliott waves is all about the waves. It's all about the market waves, the wave patterns, right? Hence Elliott waves. But because it's Elliott has its, these waves have their own guidelines and rules according to the Elliott waves theory and concept. So this is a forecast methodology. It is not a strategy. Elliott wave is not a strategy. It's a forecasting methodology. You open a chart, you look at the chart like this, and then you apply the methodology. It will help you understand where price is coming from, where it is now, and with this information, where price will go next. You see that? Where price is coming from, where it is now, and that data, according to whatever methodology you're using, it will tell you where price is most likely going to go. That's a good methodology. All right. So now with Elliott waves, I'm gonna just explain just a piece of it, which I'm gonna make examples with. Let's take the motive wave. there's something called the motive wave in Elliott wave. All right. Something called the Elliott wave, the motive wave. The motive wave is your impulse wave. Yeah, Elliott waves can be used in any market, It can be used in any market, right? So the motive wave is your impulse wave, right? But it has its own rules and guidelines. So in simple terms, this concept says that whenever there's an Elliott wave on the chart, the impulse should have a minimum of 5 subwaves. 5 subwaves. So you're gonna see one. You're gonna have the first wave, the second wave, the third wave, the fourth wave, and the fifth wave. So the concept says when there's a motive wave printed on the chart, then this is going to be Elliott waves, right? It's going to be a 5-wave structure where it's like this. Just like this. These are 5 waves, right? There we go, right? And now there are rules to this. I'm not going to get to the rules and guidelines. There are rules to this. So for instance, the first rule is the second wave. You see the first correction, which is wave number 2. Wave number 2, minimum, it should go to 61.8 of the fib. Minimum, it should go to 61.8 of the fib. That's wave number 2. Wave number 3, which should be this move going up. Wave number 3 must be the longest wave of all the waves. That is rule number 2. Wave number 3 must be the longest wave of all the waves. One of the rules, which is on the fourth wave, the fourth wave must be a shallow pullback or correction. It must go to 38.2 of the fib. And then another rule with wave number 5 is this one must be the shortest, right? So wave number 3 must be the longest, wave number 5 must be the shortest. Why? Because we've got a shallow pullback. We've got a shallow correction. So by default, wave number 5 is going to be the shortest. All right. So just to give you guys an idea of the rules and the guidelines. Right. So now, how can you use this as a forecasting methodology? Right. And I think Silver has an example. Let me open up Silver, the Silver chart. You see all of this, remember when I showed you the ABC? When I showed you guys the ABCs, when I showed you guys the ABCs here, this is all part of Elliott waves, corrective patterns that we can use as a methodology. All right, that's why we spoke about silver coming back down, because I use that methodology to forecast this, to predict this move. But let me zoom out. I think it's between silver and gold. Let me see gold. Okay, yeah, there we go. Now let me show you on gold, right? I think here's a good example. Let me show you on gold, but I'm gonna go back to that explanation first. So you see this. What it says is this, right? So if that specific instrument was to form this, how do you validate that it is forming this Elliott wave, 5 subwaves, right? How do you validate this? Well, you look at the rules and the guidelines. If the market, moves, and then it meets those rules and guidelines, what it does is that the market is moving according to that. Right, according to, so you can use that to forecast. For instance, if you see, for instance, price is changing direction, right? Like this. Let's say it was going down, and then, for instance, we see price changing direction. All right. Now, what it says is, when the market corrects here, that correction should touch at least minimum 61.8, minimum 61.8, meaning it can still go to 78.6. It can even go as low as the previous low there. It can, but minimum 61.8. So if you see the 61.8 and price starts going up from there, then it has met the first rule of Elliott waves, right? So which means you can use this to forecast the following. This move going up should be a bit longer than this one. You see this first one, this first impulse here. So the next one must be longer than this one. So it can be 2 times this move or 3 times this move. So what you can do is you can measure it. You can maybe measure it in pips like this, right? And anticipate the market will do something like this. You see now, we are forecasting now using the principles of Elliott waves. So you wouldn't guess that price will get there. No, because you saw that the first rule was met, we are forecasting using that principle. All right. So now once this move is done, so as the market is going up, right? As the market is going up, you would then have noticed that, okay, this is wave 1. This move up was wave 1. This correction was wave 2. So meaning right now, this big push going up is the third wave. It's the third sub wave within the whole trend going up. So which means at some point it's going to complete, and then we are going to have a shallow correction. So then if you are in a buy here, right? If you notice the change of structure on the lower time frames, chances are we have started that shallow correction. So you would then close your buys, and then you would use the Fibonacci, and then you would look at 38.2. So it must go to 38.2, right? 23.6 to 38.2. If it goes there, then your next forecast is we're going to go up, and this is going to be a short. So it has to go back to the high, but it won't be that long, right? Well, there is certain variations of the principle, which that's where now we get more in depth. But let's start with the basics first, like your first 2 chapters of it. It's going to be something like this, unless it's a truncation. Another word, truncation. All right. So you'll be able to forecast this move going up, this move going down, that move going up. And once everything is done, then this whole move here is one impulse, but it has 5 subwaves. All right, you are with me, right? Let me go to gold. Let me show you gold. So if we look at gold from, and you guys will understand why. I've been talking about gold going down, right? You guys will understand why. So if you look at gold from these lows, from this low here, right? Now pay close attention. So gold pushed up, right? It pushed up, gave us this high, and then came back down. It never touched that low there. Is that a zigzag? No, I'm explaining, well, it's a trend. It's a trend. Yeah, I'm explaining the impulse, higher highs and higher lows, using the Elliott wave principles. So we've got price going up, and then it came back down. You see this low here, it didn't fully go all the way down, right? So if I take my Fibonacci and measure it on this impulse going up, I can see that minimum price touched 61.8. Minimum 61.8. It can still go a little bit lower. So what does this mean? This means that that first bullish wave up is your wave 1. It's your wave 1, right? And then this one would be wave 2 here. So from here on, you would anticipate price to go up. And as price goes up, so this whole move, let me remove the Fibonacci. This whole move here, you see how long it is? Yeah, what does it do? It confirms the principle. It confirms the principle. So you have the first move up, you have the second move down. The second move confirmed the principle, right? Using the Fibonacci. And then one of the rules is this move must be longer than all the waves within the 5 waves. There we go. It must be longer, right? So there we go. So now it's long. right? Now is long. So now it confirms that we've got a 5-wave structure. So if now this is where wave 3 ends. So wave 2, these markings, guys, that I have there, I've got these markings at the end of their move, not at the beginning of their move, at the end of their move. So if I mark this number 3, that means this whole move here, I'm marking this number 3 at the end of its move, not at the beginning of its move, at the end of its move. All right, hope that makes sense. So now we're anticipating this to be the 3rd wave going up. If this is a 3rd wave going up, then the principle says you must take your Fibonacci, draw your Fibonacci, and look at the 38.2. 38.2, which is going to be our correction to complete wave 4. To complete wave 4. And then from there, get the last wave, which is wave 5. From the 38.2, which is wave 5. There. Which is wave 5. Right. So, using this to forecast, what does this mean to you now? It means, you see where gold is right now. It means we are using the Elliott wave principle to forecast price. So now that means we can see, according to the Elliott wave, we are going to get this move according to the principle, not according to me, but according to the methodology. We're going to get this move down. This is why I've been saying that we're looking for gold to go down short term. That is why. Yes, I might have taken up, I might have mentioned that, yes, it broke the high, what. I didn't go into great detail with the Elliott wave, right, for a reason. But this is why we I've been forecasting gold to go down short term because of the 5 waves. Once it's done, then we're going to get the continuation up. But as long as this wave is longer, it confirms the 5-wave structure of the motive wave. So going back to was it 449 the 38.2 of the Fibonacci, it's on 449. Wait, yeah, it's on 449 somewhere here. That's where now, according to the methodology, we can expect price to go down to. So it could go down there, actually. Could go down there. So this move on gold is not done. It's not done. It's not done, right? It needs to be a correction in this degree. In this degree, right? What do I mean when I say in this degree? It means it needs to be the correction that is in line with these swings, the 1, 2, 3, 4. You see the 1, 2, 3, 4 swings, which is like this. This swing up and this swing down. And then from there, we go all the way up. So it needs to be in line with how these swings are, not the small one in between, how these swings are. Right? So something like this. So that's why I've been saying that this thing is not done. It could, at some point, it could still do this. It could still do this and then do this again, giving us a bigger correction like that. That is what we talk about when you say forecasting methodology. Forecasting methodology. So I use this to forecast the charts. I use a combination of the wave patterns, right? So you've got your Elliott wave. I think I've mentioned this before. I use a combination of the Dow theory. What's another name for it? Anyway, the Dow theory. Whoa. The Dow theory, as well as just having a basic understanding of wave patterns. Wave patterns. And this is all one thing. They might have different rules, but the idea is they are all wave theories. right? There are other methodologies out there like ITC. ITC is a methodology as well. It is not necessarily a strategy. Wait, is it ICT? Ne? Did I say ITC? ICT. I meant ICT. ICT is another trading methodology, but not a strategy, right? SMC is a strategy. ICT is a trading methodology. All right, and then once you have all these, right? Once you have all these will help you forecast where the market's gonna go next, not necessarily finding entries. That is what a trading methodology is. Now, a trading strategy, remember, a trading strategy answers this question: where is my entry and my exits? It answers this question. So here, this is where now you would have, for instance, the strategy of order blocks, or you can say supply and demand. Supply and demand is a strategy, right? So once you have your direction, for you to get the trade in line with the direction, you would wait for the order block to form to enter on the order block. A simple support and resistance. You see how simple support and resistance is? It can still be a strategy. It can still be a strategy. But the way the market moves right now, the market, the reaction on the support and resistance is not always perfect. It's not always perfect. But I tell you, a simple SNR can be a strategy. If you know when it works, and if you know where it works and where it does not work. Where it works, where it does not work. A FIP retracement can be a strategy. So these are not methodologies. They're not methodologies. These are methodologies. These are using them to forecast price. What else is there? Well, there's plenty. Some of you guys, I'm sure you know them, you are using them. So this is the difference between a forecast methodology and a trading strategy. So I would understand a beginner trader. I would understand the beginner trader focusing on this, but neglecting this. I would understand why. And only then later they realize, you also need to include this in your trading. And this whole thing it gives you like an approach. These two things combined give you an approach. And obviously the plan, a trading plan, right? Risk management is part of it as well. It gives you a solid system, an approach, a system. That's how it is. That's how it is. All right. So hope it makes sense, guys, right? Maybe something to ponder on, maybe an aha moment. Hope hope it will just be another light. All right. So so let's just look back quickly. Nothing has changed. We are still looking for some opportunities. The JPY is moving. Gold and silver, we spoke about that. So things are moving now. All right, sticking to the same script. It's a Thursday today. Sticking to the same script. Don't want to complicate it. All right, so that's it. Hope you guys learned. Hope you guys enjoyed. Think about it, ponder it. You can even do some research on these things, just research. But the academy is there. If you want to learn these things, the academy is there. All right. So that's it from my side. We're going to end our session here. Yeah. And I'll catch you guys at 6 just to do a quick wrap up, and we'll prepare for Friday, for tomorrow. Right. I'll catch you guys later. Have a good one. Cheers.